Okay, we're good to get started.
Okay, welcome everyone. Good afternoon, and thank you all for joining us for this afternoon's edition where we will be talking about the CARES Act and specifically how it relates to sole proprietors and the self-employed. You may be wondering about the act. There's been a lot of talk in the news about the CARES Act and the various elements of it. I'm Deborah Tupel, your moderator today, and we'll be going over several agenda items before we get into the questions and answers. First, we'll introduce our participants from a variety of accounting firms who are members of our chamber. We'll talk a little bit about the overview of the CARES Act. Specifically, we'll dive in and do a review about the Paycheck Protection Program. I know you've all been hearing about it, and latest in the news today is that the first round of money in the PPP has now fully been expended, but we still thought it would be valuable to talk about it today because we're very hopeful that there's going to be a round of funding and that you'll be first in line for that. Another element of the CARES Act that we'll allude to a little bit today is the economic injury disaster loans through the SBA. That program has also ceased taking new applications, but we'll give you just a little bit of the highlights of it. And then we'll wrap up with a Q&A session where we will encourage you to ask questions of the accountants that are participating today. Just wanted to remind you all to mute your lines, and that if you do have a question that wasn't submitted previously, if you would enter it into the chat screen, we'll be monitoring that, and the team will be reading off those questions as we get into that Q&A session. So with that, I'll dive right in. We will introduce all the participants that will be our guest experts today. I'm your moderator, Deborah Tupel, with the Hutchinson-Reno County Chamber of Commerce, and it's my pleasure to welcome from Swindoll, Janzen, and Loyd, Stacy Wilson and Jason Seaton. From Adams, Brown, Beran Ball, we have Brett Henry. And from Allen Gibson Hulick, John Trowbridge. Welcome all of you, and we're really looking forward to your expertise. Thank you all for participating.
Thanks,
so just a few things about the CARES Act and some key information. I think the primary features of it that we're talking about today is the Paycheck Protection Program loans and the forgivable portion of those loans, the economic injury disaster loans, and the emergency grant portion of it. Talking in much depth, but know that there are some employee retention tax credits for those of you that are retaining employees, that on the back end of this process, there could be a tax credit for retaining them throughout the COVID-19 crisis. Some small business tax provisions, some payroll tax deferrals, as well as some small business debt relief program elements. I thought it might be helpful if we look at just the comparison between the two major tools of the CARES Act, and those would be the PPP program, Paycheck Protection Program, as well as the economic injury disaster loans. And as I said, those disaster loans through the SBA currently have ceased taking new applications, and the PPP applications, which you will apply for through your lenders, today we got the news that both the small business portion as well as the sole proprietor portion has been fully lent out, but the banks are still processing those that were in process, and we are very hopeful that Congress will do a new appropriation to continue the program. I think I might turn it over for just a minute to our accounting firms if they want to talk for just a minute about the PPP program and some of the specifics and the uses and terms of those loans. Would one of you like to jump in and give us an overview of PPP?
Sure. This is Stacy Wilson. I'm with Swindoll, Janzen, Loyd. I like this this slide that we have here. I think it does a pretty good job of giving you the highlights. This PPP program, really the intent of it is to keep people employed. And so there's lots of rules around the forgiveness element of that really encourage you to keep people employed. Just recently, they came out with guidance for sole proprietors and independent contractors. So they are trying to keep those people going as well. Again, the biggest attraction here is that the PPP has the ability to be fully forgiven if certain requirements are met. The calculation for the total loan is, as the slide says, 2.5 times the average monthly payroll for the prior 12 months. There are some specifics that go into that calculation. I don't know if we want to get into that. What they recently came out with, and I think probably most of the people on this call are interested in, is how does the sole proprietor and independent contractor fit into that? And really, they start with, if they have employees, they start with the wages of those employees for that calculation. They can also add in employer paid health insurance and employer paid retirement benefits. But what they also get to add in is the average monthly net income that they showed on their 2019 Schedule C. And so that's what they're using for that wage replacement for the sole proprietors and independent contractors. If any of this isn't forgiven, what they're saying right now is that the unforgiven portion has a 1% interest rate over 2 years. There's a lot of questions around the forgiveness piece, and we don't have a lot of answers to that. But I think it does give pretty favorable terms on the back end of this if it's not forgiven. That's kind of the highlights. I know there's lots and lots of details and questions around it.
Well, thank you, Stacy. I think we'll go ahead and move on to the next slide and just talk about the mechanics of how businesses apply and what's required of your lender. If you look, there we go. So preparing for your application for your lender, the first thing that you'll have is an application form, and we'll show you what that looks like in just a moment. And then 3 additional forms will be required that your lender will provide to you, and we have examples of all of those. The first would be reporting whether or not you have applied for the economic injury disaster loan through the SBA in addition to PPP. There's also an addendum C that goes into some certifications and questions that you'll answer as an applicant, and then addendum D is some additional information that the lender requires. So some examples of what those forms look like, and Chelsea, if you will advance to those, and I know this is rather small, but it's a really simple application actually. There's some basic business information there that you'll fill out, mark whether you're a sole proprietor. You'll fill in your basic business legal structure, and that's where you'll get into the calculation of monthly payroll. Would one of the firms like to comment on any other elements of that application form that you may wish to consult with your accountant about as you're preparing?
Sure. This is Brett Henry with Adams Brown. The hardest calculation on this whole application is the average monthly payroll. And there's a lot of different items that would go into that. Now, as sole proprietors, your average monthly payroll is, as Stacy alluded to earlier, is your Schedule C income from 2019. So they really simplified it for the self-employed. The other harder calculations for the non-self-employed was the number of employees. There's a couple different calculations on there. The rest of it is just answers to questions, yes or no.
Thank you, Brett. This next form, the addendum B, is simply your declaration of whether you chose to apply for the economic injury disaster loan, the amount in which you applied, and the loan number and purpose if you've already been approved for that. Moving on to addendum C. This is where you'll make several certifications to your lender about your eligibility to borrow, whether the length of time that you've been in business, that you haven't had any other issues. There's several questions that are just basic that you would expect when you're doing a loan closing. And then addendum D is another form that you would indicate any other owners of your business, as well as then listing the use of the proceeds. So whether you're using the proceeds of this primarily for payroll, but obviously there's some other qualifications, mortgage interest, rent, utilities, and such. So pretty simple loan closing document there. From there, I think we will move on to some of the typical questions that we've been hearing, what clients need to have prepared. Obviously, we've shown you some of those forms, tips that our accounting experts have for you. How do you calculate your payroll? Again, we'll recap that, some other costs that are allowable under PPP, and then what is the process for seeking the loan forgiveness? I think what we'll do is move back to the screen where we can see everyone's faces on the screen so that you'll feel a little bit more interactive throughout this process. And we'll just jump right into those questions. And again, if you have specific questions applying to your sole proprietorship, feel free to enter those into the chat screen, and I will have Lacey and Chelsea monitor those and jump right in with questions. So for our accounting experts, what do the clients need to have prepared? Besides these basic elements of the forms, how are you assisting your clients through the preparation process?
Yeah, this is Jason Seaton with Swindoll, Janzen, Loyd. Every bank that we've seen so far has a listing or a document out on their website under the SBA lending section that is just kind of a typical request list. We've recommended, so first, if you're going to go through a bank, you've got to go through a bank that is an authorized SBA lender. So that's really the first thing to check. We've recommended that you go with your own bank if they are already an SBA lender, since that might expedite the process a little bit. We've heard if you go through a bank that isn't familiar with you, you might have to end up gathering a little bit more information. But the typical information that you need is pretty simple. So kind of like we said, you'll need to show how you calculated the amount of loan that you're applying for, and then specifically on the payroll cost, if you use a payroll system, you would want to do payroll reports out of that. If you don't use a payroll system, maybe an Excel document along with a bank statement showing those payroll payments being made. We also, one other thing they did specify is you'll need to prove that you're still in business as of February 15, 2020. And so if you, usually that should be something pretty easy to provide. It might just be a bank statement showing that you have deposits coming into your business, but that is one item that the SBA is requiring now. We've also seen some requests, and the banks might have backed off this a little bit on the forgiveness aspect, to just ask, how are you going to spend the money? So like we've said, the sole proprietors, it's a little bit easier because it's based solely on your 2019 Schedule C. But if you're planning to use other allowable costs like the rent, interest on mortgage, and utilities, then you might want to compile a list that shows, here's what my expected other expenses will be for the forgiveness. And then the last thing on the Schedule C, so we know there are a lot of people who probably haven't completed their 2019 yet, since the tax date has been extended. And if that's the case, you'll still need to complete the 2019 Schedule C. It doesn't necessarily have to be filed, but if you do complete a draft one, we would just recommend that you mark that as draft. But even if you haven't filed your return, you'll still have to complete the 2019 Schedule C, at least a draft form.
Very good. What are some other costs that, beyond the payroll, that you can include in your request? And I think that would be on that addendum C. I'm sorry, addendum D.
Well, the costs beyond payroll that you can include, this is John Trowbridge with Allen Gibson Hulick, are mortgage interest on business property or rent for business property. You can also include utilities. And the thing about it for self-employed individuals, if you have a home office, we're pretty sure from the guidance that we finally were given earlier this week that your mortgage interest, your utilities that are applicable to your portion of your home that is your home office probably won't be allowable. But if you have a separate business facility, then that rent would be allowable. So I think that's unfortunate, but it's kind of a mechanism of how things are. One thing that they did include that I found interesting for self-employed individuals, and this wasn't addressed necessarily for other businesses in the first set of guidance, is that they specifically used as an example of rent a lease for a business vehicle. And they also specified for a utility gas for a business vehicle. So I found those things interesting. Do you guys have anything else?
John, the only thing I would probably add to that is we've taken the approach that those types of costs that you just mentioned would only be forgivable in that 8-week period following the loan if you do include those on your 2019 Schedule C. So if you're including those exact same, the rent, utilities, expenses on your Schedule C for 2019, that's the only way that you'll be able to forgive any expenses during that 8-week period.
I think they did a great job of explaining a little better their intent on this latest round of guidance for self-employeds. As John said, they did specifically say like rent on a vehicle and gas for your vehicle. The way I read it, I think they said mortgage interest includes, interest on real or personal property. And I know when we read the guidance for, the first round of loans, I assumed at least that mortgage interest was only on real property. So it seems like they're expanding some of the rent, utilities, and mortgage interest a little bit. I don't know that they've specifically said that same detailed guidance applies to the first round, but I would hope so.
Well, and really the decider is going to be, other than the SBA and Treasurer, whoever decides those guidelines and gives them to the lenders, is going to be the lenders. They're going to have to certify what is forgivable to the SBA, and then the SBA will have to accept that or not. So I would suggest, if you have questions when the time comes, or even beforehand, maybe talk to your lender and see what their understanding is and what they're going to accept, barring other new guidance.
Yeah, it's always better to ask the lender that exact question beforehand to make sure that you get what you can get.
And we're already getting a lot of questions about how can I don't want to say game the system, that's not what they're trying to do, but how can I make the most of this? And what we have told people is to just do business as usual for right now until we have better guidance. And then we'll follow up as soon as we do have more guidance and help guide them through the rest of that 8-week period.
For the payroll calculation for a sole proprietor, to what extent can they include any of their own benefits in their payroll calculation, or can they at all?
My understanding is they cannot include the self-employed health insurance or like contributions to a SEP or something like that on behalf of the independent contractor themselves. Now, they could include those costs for their employees if they have them.
That's the way we read it too, unfortunately.
You mentioned about being able to include under utilities gas used in the business vehicle. Is that only in the case of a leased vehicle, or is that across the board for any business use of a vehicle?
I
Good
read it as
question.
across the board. One thing we did mention, I don't think, that we probably should, and maybe folks already know this, is that wages by employee are limited to $100,000 when they're calculating their payroll costs, as well as the net income for the self-employed individual. If his net income on his Schedule C is higher than $100,000, he's limited to the $100,000 when he's calculating his average monthly payroll cost.
It's a good point, Stacy. And if you have a partnership and you haven't applied already, the new guidance also stated that partners, their self-employment income, I believe whether it's guaranteed payments or their share of the partnership income, can also be included in the payroll costs for the loan application up to $100,000.
One of the questions that was submitted prior to the webinar was about workers' compensation insurance that is paid out monthly. Can that be counted in the payroll cost?
I don't know about others. I know we included it. I think some banks pushed back and wouldn't allow it. I don't know that I've seen anywhere in the guidance where it specifically says workers' comp. I don't know what others have done.
I would agree. Some we did, some we did not. It was more based on what the bank was requesting and what the bank would do.
Mm-hmm.
Yeah, I'd agree. I think letter of the act, or at least the best guidance we had, did not address that. It did specifically include state taxes based on compensation. So in other words, really in our case, state unemployment taxes. So that is also added in to your loan calculation and your forgiveness piece, but as payroll cost. But I think work comp, strictly speaking, probably not. But if we included it and the bank accepted it, that's okay, I guess.
There was a question submitted, and this really deals with the unemployment implications. As an LLC owner, can you collect unemployment since you're not already paying into unemployment currently? And if an LLC owner can collect unemployment, can you still use PPP funds, or is this considered double dipping?
Yeah, that is some new guidance that really has been issued as well in the most recent interim rule. We've taken the approach that you cannot apply for both PPP loan and then receive unemployment. The unemployment benefits in general have been expanded under the CARES Act to include the self-employed individuals, and so there is opportunity for for either one, but not for both.
Okay.
And from what we've heard, the state is not prepared yet to handle those claims. And so we've encouraged our folks to just keep applying. I don't know if anyone else has had success as a sole proprietor in getting unemployment or not, but I don't think we've seen anyone.
We haven't seen anybody either actually get accepted.
One of the viewers submitted a question, and I know John has answered it via the chat box, but I'll go ahead and recap. David Dukart asked, are part-time employees allowed to be included in payroll?
Yes. Yes, they are.
That's the most straightforward question yet. Do any of our viewers have questions you'd like to submit via the chat feature?
So one thing, while we're waiting for maybe some questions to come in, I know a lot of people are wondering, okay, I'm hearing today that the SBA is not accepting any more applications. Lenders, most of the time, most of the ones that I've talked to are still accepting applications, but they're just going to hold on to them. So you probably want to go ahead and submit your application and get in line. But then so clients are asking, okay, so what do I do in the meantime? What if I don't ever get any? What if they don't fund it anymore? Hopefully they will add that $250 billion that they're talking about in funding, but what if they don't? So our suggestion is to try and utilize some of the additional relief measures from the CARES Act, such as the deferred payroll piece, the enhanced or the employee retention credits if you have employees. If you're self-employed and don't have any employees, those aren't really beneficial. One thing you can do is you can go to your lender and apply for a normal SBA loan. Any 7A loans, one of the things we had listed earlier was SBA loan forgiveness. So what if you get an SBA loan within 6 months of the enactment of the CARES Act, then you can get up to 6 months of it paid for by the SBA. So in a sense, forgiven. So that is something I would recommend if you don't have employees, if you can't take advantage of any of the other things, go to your lender and see if you can get an SBA loan.
Great suggestion, John. Locally, I would also say that there are some other resources in our community. I know we have some of the callers on the line from the Quest Center for Entrepreneurs, and they have Quest funding as well as some rural development funds. They also work with SCED, which is the South Central Kansas Economic Development District Office, and Network Kansas, Reno County E-Community Funding. So they operate a variety of loan funds that might be able to be used in some of these instances, depending on what your use of the funds would be. So I would encourage you, if you opened up that relationship with Jackson Swearer and Dave Dukart, both at the Quest Center.
We've had 2 questions come in the chat box. The first one of them being is, what utilities do not fall under the guidelines?
It seems to me like the definition for utilities is pretty broad. And they've said, you know, electric, gas, water, trash, recycling, telephone, cell phone. And then with this most recent guidance, at least for the sole proprietors, they have mentioned, as John said, an example of gas for their vehicles. So it seems to me to be pretty broad.
You consider the your internet connection service utility, Stacy?
Yes, thank you. I forgot to mention that, but yeah, I do think that they're allowing that as well.
The internet is actually in the bill. It specifically says internet is a utility.
Okay, and the second question, are you suggesting we apply for both SBA and PPP loans?
I would suggest you apply for anything you can get. You can always turn it down. If I know we were suggesting when EIDL, the economic injury disaster loan, was viable, at least, and hopefully it will be again, but we were suggesting that you apply for it because they were supposedly going to give you $10,000, up to $10,000 right away within 3 days of your application. It was a simple application, but then the SBA was going to come back and negotiate with you and tell you how much they thought they would lend you under that program. And who knows how long that was going to take, because SBA is underwater as far as their employees and how busy they are. So then we said, go ahead and apply for the PPP loan, because that's where all the resources are being funneled right now. And you've got, you know, all the lenders, or most of the lenders, at least all the SBA lenders, trying to help you with that. So maybe you can get that money probably more quickly than the EIDL. Well, now we don't know if that's going to be funded. So I'd say, yeah, I'd apply for the EIDL. If I had already applied for the EIDL, I'd go ahead and apply for the PPP loan, and I'd start talking to my lender about a 7A SBA loan if I could. And if you get them all, then you can decide which one you want. But likely you're hopefully going to get one. And in the meantime, before I got any of them, I'd look at what other of the credits and deferrals that I could utilize.
And there are a lot of advantages, you know, like John was saying on new SBA loans. You've got until I think it's April or September 27th to complete to have the loan funded, and then be eligible for 6 months of payments. So where the SBA actually makes principal and interest payments on your behalf. And then, you know, the other benefit of the typical 7A loans is that you can still, that you're not restricted from taking the employee retention credit and the payroll tax deferral like you would be with the PPP. So that's another added benefit of those typical 7A loans.
Yeah, I wanted to specifically mention, we kind of threw out some payroll tax credits. We didn't really talk about those, but I just wanted people to be aware that if they are taking that employee retention tax credit, so to my knowledge, this credit's available for people who've had to close their doors or they've had a significant reduction in revenue. If they utilize that payroll tax credit, they cannot also take out a PPP loan. However, if they're using the payroll tax credit because they're paying somebody under that Families First Act, so the expanded sick leave and family leave, they can also have a PPP loan, but their eligible payroll costs for the forgiveness will be reduced by those wages that they get that credit for.
That's an excellent point. Another question that came in, just for clarity, monthly, John Richardson says, I think he's saying working capital. Maybe he means workers' comp. I think he's talking workers' comp, monthly workers' comp that he's paid out. Can it be included?
Guess I'm not clear on what he's paid out. You mean premiums?
I think so. We'll see if he wants to weigh in and put.
The way I read this is asking about the premiums if they're going to be included in the PPP loan. And again, I think that depends on which bank that you're working with. There's numerous banks here in town that said yes, and numerous that said no.
And the act isn't clear, or the guidance we've received afterwards.
I think that's the reason we waited until this week to host the webinar, because the guidance hasn't been entirely clear, and it certainly wasn't a week ago when we tried to launch this the first time. So we appreciate everyone's patience, and we know we're telling everyone, please give your lenders grace, give your accounting firms grace, because everyone's wading through all the guidance or trying to wade through with some lack of guidance and clarity. So thank you for hanging in there with all of your professionals. Well, unless there are any other questions, do you all, as the experts on the panel, have any other remarks that you would like to make before we wrap up this webinar today?
One comment, I know I've been asked a couple times, if you had a loss in 2019, are you eligible for the PPP loan? And the answer is, if you have a loss and you have no employees, so you're not paying any payroll costs, then we don't think you'll be eligible for the PPP loan. But if you did have a loss in 2019, but you also paid out payroll costs, then you'd be eligible for the PPP loan based on the 2.5 months of those payroll costs. So even if you had a loss, it could still potentially be worthwhile.
One last comment I had was we didn't really talk about the payroll tax deferral. And I don't know that I really want to say a whole lot about it, except that we are cautioning a lot of our clients against doing that. And the reason for that is, if they get to the end of that deferral period and they no longer have the money to pay those, there's some pretty stiff penalties that can come with that. So we're encouraging our clients at least to use that payroll tax deferral as a last resort. And if you are using the PPP loan as well as that, then my understanding is you can't defer your payroll taxes past the date that your loan forgiveness has been approved.
Thank you, Stacy.
Last thing I would have, I guess, Deborah, here is, there's 3 accounting firms on this webinar trying to help you guys out. I think we've all spent numerous hours researching this for you guys. Don't hesitate to ask questions. We're here to help. This is what we're here for.
Thank you, Brett. John, do you have any other remarks?
Well, I agree with Brett. If you have questions, please feel free to email us or call us. But the other thing I would just throw out there, I was a lender for a couple of years, in addition to my 30 years in accounting, but be nice to your banker. They're your friend. They're especially your friend right now. They are working hard, long hours trying to get all the applications processed. I know it seems frustrating from the applicant's point of view, but the ones I know well are working their tails off to try and help people. So, and they're the ones who are going to ultimately be the deciders on what gets forgiven and what they're going to accept. So work with them.
Comment just came in from Jeanette Richardson with Prairie Bank, Kansas, and she just said thank you from the lenders. I know several are starting to comment that this is great information and they appreciate it on behalf of our small business community. So I'll have Chelsea go back over to sharing this final slide. We want to make sure that you have some links to resources that are available to all of you. And again, I just want to say a big thanks to all of our experts on the call today. From Swindoll, Janzen, Hawk, and Loyd, of course, Stacy Wilson and Jason Seaton. From Adams, Brown, Beran Ball, Brett Henry, and from AGH, John Trowbridge. I would also like to just give a shout out to all of the accounting firms that are Hutch Chamber members. These are certainly not all that are in our chamber membership. So if you go to hutchchamber.com and look at our membership directory, there are a lot of other accountants and financial advisors in this market that can give you great advice. And I would encourage you to reach out to them as well as your lender through this. A lot of them have resources on their websites. And so we have here, and we'll post this later for you, all of the specific COVID-19 update resource pages from each of these accounting firms We also have a coronavirus resource page on our hutchchamber.com website. So please look to those resources, but don't hesitate to reach out with questions. We will be sending this out after the webinar, and we'll of course post it on our social media. So thank you again for tuning in this afternoon. The Hutch Chamber wants to be a resource for all of our members, and we just appreciate all of you being engaged and asking the tough questions. Thanks again to all of our experts. We'll close the webinar for today, and look forward to another opportunity to engage with you soon. Thank you, everyone.
Thank you.